assets purchased. Now, tangible assets is your fixed assets. Now, I just quickly want to say to you, if I do, so usually they will either give you single ones, land and buildings, vehicles, equipment, separate. But 9 out of 10 times, they give it to you as a total. Okay. Now, if I do fixed assets as a total, and I do it at cost price, it's very straightforward. Everything inside this T account has to be cost. So I have an opening, a closing, whatever I buy, and my asset disposal. And everything here has to be at cost price. And it can literally, they will always give you the opening and the closing. And you're going to have to calculate either what we buy or what we sell. So can you see, with this, you can always have a minimum of 3 marks. Because if you say the opening less the closing and you have the answer, there's already 3 marks. You get what I'm saying? Now, most of the times they don't give you the cost price. Because if I go to the face of the balance sheet, my fixed assets is not at carry value. It's at what? At cost price. It's at carry value. So now, just think of this. Opening, closing, whatever I buy, asset disposal. Everything is at carry value. Right? Even what I buy, because when I buy something new, the cost price is most equal to the carry value. Because we haven't depreciated yet. Is everybody with me? Now, what is the difference? Let's say I didn't buy or sell. Right? Let's say I have an opening carry value and a closing carry value. What's the difference between the two? There's a difference. This one is going to be lower than that one. Why? Depreciation. Right? So, I'm going to put depreciation in there. So, there's your format. I've got an opening and a closing, whatever I buy, and an asset disposal. But because it's at carry value, I also put in depreciation. Okay. So, this, listen to what I'm saying to you. This, in the face itself, we sell fixed assets and we buy fixed assets. Ne? Now, listen. If I look at this, this is 1, 2, 3, depending which one. Let's say we had to calculate the 4, 5. You take that one, 6. You can do this. Everybody needs 6 marks in paper 1, especially after you've done question 1. Okay? So, let's do this. Yes.
Why does the closing balance balance out the T account?
Why does the closing balance?
Balance out the T account. Why must this side equal that side?
Because when you balance, ne? Let's say, please don't talk when I speak. Okay, so let's say there was nothing bought or sold, and I'm working at carry value. And they give me my opening balance is 10. And my closing balance, remember this is your CO, is 8. Then I know my depreciation is 2. I'm not answering your question.
No, I'm just wondering why is there. So the balance would move to the debit side at the end of the day.
Yeah, remember we are working, when we go back to grade 8. Remember grade 8, we actually, in grade 8 we did a T account for bank. And we said we had a balance BD, 10 Rand. Then we had total receipts, 20, total payments, 12. Then we taught you the smallest side is your balance CO. Ne? Then you total your biggest side, which is 30. You transfer the 30. The 30 minus the 12 gives you 18, and that you copy and paste. Right? Now, the principle we're working with now is that everything on top of the totals, both sides need to add up to the same. So whatever is missing. So now I can say to you, oh, I give you the opening and the closing balance, but I don't give you the total payments. Now you should know, oh, if I say this is 30, this must also be 30. So 30 less 18 is going to give me 12. Or if I leave out the opening balance, I know if I add this minus this, it's going to give me the opening. In other words, the principle says that if I do my fixed assets at carry value, opening, closing, buy, sell, depreciation, I can literally ask you to calculate anything if I gave you 4 pieces of information. The 5th piece you can calculate. Okay. You don't need the opening and the closing to put inside the cash flow, so they will always give you those two. So those two is always given. So can you see, if they tell me what I buy and what I sell, I can calculate my depreciation for note 1. Am I starting to answer your question? Okay, so I work here with the CO and here with the BD, because I'm working with on top of the totals. Okay, so the CO is always the inverse. If I know it's a debit balance BD, then the CO would be credit. You guys with me? Okay, now I don't know where I am. Where am I? Yeah. Okay, so I'm not going to do the cost one with you, because the cost one is literally the carry value one, but without depreciation. So you always just look what information they give you. If I look at this at vehicles, can you see they did give me the cost? So if I do it, let me do it. It's an opening, it's a closing, it's a bank, it's an asset disposal. Okay? Can you see here? They say nothing was, there was a vehicle that was sold, carry value 12. Can you see that you cannot do this method? Because you don't have the cost price of what was sold. Okay? So you have to do the carry value method. Opening, closing, whatever I buy, my disposal, and depreciation. Opening, now I'm using carry value, is 88. Closing is 139. Stop. Depreciation is 42. Disposal is 12. Can you see now I can calculate how much did I buy? Quickly do that for me. So what does this add up to? 193 less 88 gives me 105. So in other words, if I go to, I'm never going to ask you this note. If we go here, the 105 is going to go into brackets, and the 12 is going to be without brackets. You always put here the carry value, because you will see in cash flow they always sell the asset at carry value. So that's the money coming in. Okay. If they were spiteful and they said you made a profit, they told you the carry value is 12 and they said you made a profit of 2,000, what would you put here? How much money did you get? If they told you the carry value is 12 and the profit was 2, what was the selling price? 12 plus 2, 14,000. You get what I'm saying? Then you would put there 14, because here, this is always the selling price.
Can you please go back to that slide?